But we'll talk about the importance of rebalancing your portfolio on this show all the time, and let's do it right now. Lee Munson is with us, Chief Investment Officer, Portfolio Wealth Advisors. Lee, great to have you on. What's your mindset these days about the market and when you should be rebalancing for the long term?
So here's a bottom line. The market goes higher, right? I mean, it goes higher in general. We've got national income at all-time highs. We've got a government that wants to do stimulus. And then we've got a tech market that I think is in a clear bubble, just like large cap growth was 20 years ago. But yet, that's not the whole market. And then we have the news, the disgrace of last week, the inauguration of next week. So here's how I would play it right now. Bottom line, if you're overweight in stock and you don't know what to do, you've got to rebalance that to whatever your neutral holding is, right? And you have to have an allocation in the first place. So let's say most of my clients maybe have a 60% in stock, 40% in bonds. You know, everybody's individual, everybody has their own thing. But get back today to that neutral stance. I'll tell you why. Because I think there's a high chance that we could have a correction over the next couple days or next month or two. So what I like to do is I like to get back to neutral. Why? Because instead of trying to time the market or figure out I should have cash or is this the peak, I just want to be where I want to be long term. So if we get that 10% correction, I could go in, I can sell my bonds, I can buy stuff, but I didn't give profits back. And I think that's so important because if you've done well right now, you should be overweight. And if you're underweight, I kind of don't know what to tell you right now, right?
Well, I guess you could wait for the correction that you think is coming and then get in. That being said, you talk about rebalancing, right? And maybe taking some money off the table, taking some profits, being on a more neutral type of stance. Is that just a generality when, I mean, don't you just rebalance quarterly, or do you wait for certain pullbacks or moves higher? Is it better to rebalance on a pullback day or a higher day? How do you do it?
Why not do it on every Friday the 13th? No, you have to do it in a methodical way. So the thing is, if you're doing rebalancing right, number one, is that you're looking for general. I always start with the correction first, right? You get a correction, whether that's down 5, 10, whatever, and that's where you want to overweight, in my personal opinion. That's how I roll with my clients. And then as that market reaches that high watermark and it makes new highs, which over time markets do, that's that new high, that big high watermark from where you last rebalanced, that's where you want to pull it in. Here's a thing that I'll get in particulars that nobody ever talks about rebalancing, because you don't do it on a time. You do it when the market reaches a certain level. Where's that level? You have to decide how much you're willing to let your winners ride. So let's say you want to have 10% in Bitcoin. Just make something up hot. Well, if 10% becomes 20, right? Or, you want to rebalance. I generally, with stocks, give it a 10% corridor. That's a good rule of thumb. So if I'm supposed to have 10% in a particular asset class, like, mortgage REITs, when it goes to 11, I just bring it back down to 10. If I have a 10% position and today after correction, it's at 8 or 9, I use that day to say, raise it up. That way you're not rebalancing, during your lunchtime. You're not doing something silly like making it arbitrary. You do it, you rebalance when that position has noticeably gone higher to where your model, where you think you want to have it be. That's the most important thing. That's what separates professionals from less than professionals, is knowing, am I going to give Bitcoin 10% movement? No, you should give it 50% movement. Am I going to give the S&P 500 more than 10 or 15% movement before it rebalance? No. When the S&P gets 10% over from where it needs to be, that's when I say, hey, bring it back in to where my general pie chart, that general model needs to be. So you can let your winners run, and you don't add to the losers until they've really hit the bricks, or else you're just guessing, you're just pressing buttons. Wasting time.
Well, let me ask you this. Those are great tips for long-term investors. You have to be more methodical about the whole thing. I know that, as a professional, and this is why, it's important for people to talk with professionals and decide if working with a professional is for them. It's something I do. I always like to have somebody helping me, because sometimes you can get emotional or make some hasty decisions, or maybe the professionals are noticing something else that you didn't. That being said, you're looking at all kinds of things. You're looking at rates, you're looking at regulation, you're looking at what the administration has on the docket. Are there certain things that you would go for 2021 or the next 5 years, certain sectors, for example, or how you would break it down?
Yeah.
For bonds or whatever, what would you advise to make money?
Our big winners, our big winners last year were actually the biggest losers of last year. So we've done very well with mortgage REITs. You can buy it in a basket. The ticker symbol is REM, like the 80s pop band that we all used to listen to. Because I wouldn't go in and try to find the best mortgage REIT. Please, they're all leveraged. So that's a way that you can get a play on people wanting to get yield, people searching for yield, not taking credit risk, but taking leverage risk, knowing that the Fed is going to keep those mortgage REITs, their cost of borrowing is going to be low through 2023, no matter what inflation is. The Fed is saying, I'm giving you a trade on mortgage REITs. I'm making it very easy for you. As long as those CEOs don't just screw the pooch, you will make money on that. The other thing is master limited partnerships. I like to buy AMLP. It's an ETF. These are just gas pipelines. Listen, they're paying 9, 10%. People are going to search for yield, and that's where it's going to happen. And they're off 30% from last year. You could have bought them anytime after the crash, and they've been a relatively good deal. Look at them today. But again, you have to hold them for 2 or 3 years, 5 years. And if you get out the principal you put in, then you've been making a lot of interest over that period of time. And of course, right. What do I love the most? I love small cap value. I've been talking about it. People were in disbelief, making fun of me last year. They're doing well. I would wait for a pullback on small value. I think if we get a 5 to 10% pullback, I would be going. It's a multi-year play. It's not for the next month.
I get it. Well, that's great stuff, Lee. Always love our conversations. Thank you so much, Lee Munson. Thanks very much for breaking down everything and giving you some tips for your long-term portfolio.